Good morning, everybody. Well, the NASDAQ has played full catch up, created a bullish price pattern after the run, made new highs. Theoretically, there should be nothing stopping it from continuing to move higher. That was that pullback pattern on the weekly time frame, classic two bottoming tail bars, and up it went. So we've got that greater than 100% retracement. Got a pretty big number there in front of it at 350. See if it can get through that. And as I look at what's going on, as we always do, we look across other markets. It's so interesting. Markets are always interesting, but what makes this one interesting at this point in time is the divergence between what looks so positive and what looks so bearish. And being in the right place always is of a huge benefit, of course. Picking the wrong sector that's weaker, but it's like the market is being pulled in two different directions right now, or suggested directions. And I guess we'll just see how it unfolds here. But I mean, there's nothing bearish to say about this pattern. It's made its move. It's made a measured move. When it had the chance to roll over, it didn't do it. Bottoming tail, gap reversal, inside bar, a dip, and it moved up yesterday. So as long as it stays above this area, the assumption is it'll continue to go up. And bar by bar analysis in multiple time frames, it'll tell us if something changes. So looking at both weekly and daily time frames, a move under this week's low would be a bearish event. It would not change the trend, but we'll see how it unfolds. And we can see, just based on what's happening here pre-market, it broke down and it came right back up again. One of the things we spoke about yesterday was the fact that prices had moved up. I mean, there was this humongous wide range bar to the upside on the S&Ps, the futures. And so one of my comments was, okay, this created a void below. So what has to happen is it needs to create new support. And it's exactly what it did. So these, what I call MTS concepts, or thought building lessons, as we call them in the course, guide us as to what's happening. So based on what's happened, it leads us to thinking, well, if this, then that. So we get this huge run up, which creates a void. Now that's bullish. It's at resistance. If it can create support, somebody's saying, well, what does that mean? Well, we define that by initially a pivot happening. What's a pivot? 3 higher lows to the left and right. And then a retest of the pivot. And then bar by bar, wide range bar up, opened up the door to go higher. Now that it's done that, and it's up against these, the all-time high here, we see initially momentum stalling. There's been a drop, dip back up again. And so can it do this sideways price action at resistance here? And based on the daily time frame, that might take several days. So longs at this point without a correction bar, as we call it, really don't make sense. So wait and see what's going to happen here. Does it go sideways? Does it dip? Does it come back up? Does it roll back right back over again? So far, this weekly chart with a red bar being ignored, and we'll see what that bar looks like on Friday. Does it look like that, where it's gone sideways at this resistance area, or is it a topping tail? We'll see. All right, looking at the Dow. So this created support in a different way, meaning it broke down and it went right back up again. And that's what we call a downside shakeout. It broke down under the pivots and then went sideways. And you can see the topping tail bar can continue to go sideways. But the bar by bar analysis there said, well, that was bearish. That was bullish. What's going to happen here? 2 hours later, it didn't go down. And then it started its grind up and topping tail being ignored. But this is the vast divergence between these markets where we look at, NQs, the NASDAQ futures here, which, red bar being ignored, reversal, it went up, momentum so far stalling. It's, 9 o'clock, big deal. But the assumption is it can keep going up. And then we look at another market, well, that's a powerful reversal, but I've seen plenty of powerful reversals roll right back over again after a topping pattern and a breakdown. So it's not quite at resistance yet, but this is setting up a bearish turn. We'll see what happens. We go and look at the transports, and we see a topping pattern and a break, and coming back up to where it should form a bearish turn. Potential diamond put spread. If you can get below that wide range bar with a put spread this week, I would say it's a no-brainer. Okay, and no-brainer, the answer means that if you can get a put spread down here, there's no way that it should go down there. You should be able to collect the money. Below 336, I would not bet on that. I wouldn't bet on that, because if this does start to, it should look, if looking at this pattern, it doesn't matter whether it's the diamonds, whether we're looking at IBM or corn, it doesn't matter. This pattern, theoretically, we would say, well, if it could come up to, say, the 50 MA, close to the area where it broke down from, and then we've got a topping tail or some kind of a reversal pattern, short it, looking for a move down to that low or even lower. So 330 for next week, you're really putting me on the spot, McGraw. The crystal ball gets more cloudy as we go further out in time, but what are the futures doing here? Probably nothing. Exactly nothing. As I said, I would not be shorting this based on this powerful reversal. So below that should be fine. And I would not think about a short until it got up into here or some pattern formed. So does the room for error? Well, yeah, we always look for the right. And you're saying room for error because we look for where's our protection, so to speak. So this reversal here should be an important level in if we're looking at the Dow futures, since it had such a powerful reversal, now it shouldn't even go down there, but we know at some point, based on the daily chart, it should go down there and break it. But that setup isn't there yet. We're not there yet. So I think this potentially, if this was what we were just looking at, I would say potentially this should be able to continue to go up into this area over there. Let's bring this down. I think that's the next level. I don't know if that topping tail is real. I guess it is, because that red bar over there to the left, right here, probably the top of that bar. But that's the more significant area of overhead resistance up there at 34,100. But 3,400 in of itself, that's an area that, the whole number thing where it would stall. So somewhere in here is where it should try and roll back over again. Now, that is certainly not the ideal type of two-bar pattern, that we'd want to short, looking for it to go down, but it is a void. So this market continues to be, let's say, less than ideal as far as patterns between indices, or the patterns themselves as far as the ideal historical patterns. But Now, this was ideal historically as a retest pattern to create support after such a run. Now it's at resistance, and it makes total sense that the momentum stalls here. I don't know what's going on with this. They're not fixing it, but it's not right. So we see, looking at the Russell, it came down pretty hard, came close to that number there, and it's retraced. And other than day trading, I just don't see any reason to be trading this thing. It's certainly not for swing trades. It's just such a mess, and it's been that way all year long. But very interested to see, can it actually retrace that red bar? So another thing what we'll see is the Russell and the Dow. Media focus on the 50 MA. Now that it's broken through the 50 MA, that'll be a reference point for institutions. We'll see if it can get up there. And SPX is Wednesday. How far away can you get? So simply, I honestly, I didn't have time to check this out, but I will shortly, and I can type in there. But look, if you can get above this 4280, that should be fine. And then just look at the option table and start looking below. Right? This is a void here. So as you look at the option table, you just simply keep going down until you get to something that's like, 40 cents by 60 cents, 50 cents by 70 cents. So at some point, once you go below, it just becomes, there's no Dan calls juice there anymore. So this pattern has the potential to fall sharply. Because it's risen this far, odds are it's not going to get too far beyond here. So see what the premium is down there, and then just look how far away you can get below, even like 4,200. Bonds is premium at 4,210, which is ideally it would have, looking at lines of defense, going back to here, whole number 4,210. There's absolutely nothing there. The 50 MA is down here, and breaking below yesterday's low, I think 4,210 could be pretty easy to hit, because this is supposed to hang up here from the bullish point of view and be a grinding type of a day. Right? The bullish action would just be a grinder. Yeah. To just hang up there today. So I think the call side, if there's premium up there, is the better way, since it's already gone from an area of support into an area of resistance. And even though it might go up and even make a new all-time high, right, if there is some rally here and early in the morning, it's just not likely to go very far. 4275 is what I'm told is where the premium is. So one of the things we do is like, okay, the premium, it is what it is. That's where it is. We look at the futures and we see relatively bullish price action, meaning it dipped down, it came back up, it's going sideways. So if it clears these highs, and you can look at the spiders if you don't have the futures, if it clears these highs and it runs higher, the premium will increase up there, and maybe you can get a little bit further away. Take what is pre-market, and then as the higher it goes early in the morning, right, the less and into that resistance area, the more likely sellers are going to reemerge. So as far as the call spread goes, we're looking to fade that area once we get even a 5-minute or a 2-minute type of bearish pattern up there. All right, let's get oil. just continues to be bullish. Gold, should keep an eye on this here. Set an alert above these highs. This has been going sideways for a while. And if it can clear this, it should be able to try and retrace. And it hasn't been able to. But if the markets begin to, fade here a little bit since they're at resistance, this might find some legs, and it's got a void above. And as I mentioned yesterday, you can see that the dollar is down here a bit. You could look at the euro to see if it's going up. So that's starting to retrace. So gold might retrace. We'll see if that can move up. Now, Bitcoin was interesting yesterday, right? We took a look at that, and I said, look, while this is breaking below these lows, bearish, this is a terrible place to be thinking about shorting. It's just a sucker bet. Several days down, a greater than 100% retracement, right? It's likely momentum will stall, and right, the stops get taken out. It's kind of like a flush where, that stops being taken out kind of is like a relief valve being triggered. And so it starts to pop back up again. So as a counter trend trade, that sets up that exactly. And here you've got this shakeout type of a pattern going sideways. And so it's at a whole number. But now the question becomes, has it bottomed? Was that it with that shakeout? So what we do from a swing trading perspective is, well, one of two things. You could look at the ETFs, you could look at the stocks that trade in alignment with that and day trade those, of course. But the further, and this is what we call our factory work, our common sense analysis of just saying, hey, this fell from here to here, and that's bearish. But the further that this can retrace into this drop, the greater the potential that this has made a bottom. So this will become a pivot low when it's 2 days to the right. It forms another pivot low. You've had 3 retests. That becomes a good reference point that should not be violated. And then can it get above that pivot high? Well, you can trade it from here, right? At this point, as I said, based on intraday patterns, and see how much it retraces. And we can look at those stocks that move with it, and we'll see. Again, the further it goes up, this weekly at the end of the week actually becomes a bottoming tail bar. Can it become a green body bottoming tail, meaning it closed above its opening price? All of those things become supportive of a bottom in this area. And like everything else, we see how it progresses once we have an indication to shift our bias. And yield bouncing back up again. And this was, part of the bearish case that, we reviewed this head and shoulders top at the time, and it broke down. And so one of the relief things for the markets, as far as the markets that they rallied, was the fact that the 5 years started to pull back. You remember we covered this last week, how the 5 year sprung up, and looking at the 30-year, it collapsed back down and tightened that yield curve, scared the markets. And now we've just got this little relief of that bearish event. And now we're going to see, today into tomorrow, if that bearish event continues to unfold, or whether it was just this market being schizophrenic. All yours, Dan. Is this one of the toughest markets you have seen making money? No, David. Someone asked me that in YouTube. No, so Dan, I'll tell one little story. I've been doing this a lot of years, so I've got lots of stories. But the bear market that started in 2000, March of 2000, as it bottomed, I guess started to bottom in 2002. So many NASDAQ stocks were down 90+%. It was almost impossible to make money trading stocks. And things went from trading in decimals to decimal, from fractions to decimals. Things tightened up, to less than a penny. People were trying to trade for pennies on level 2. It was terrible. And I started trading futures at that time, trading the S&Ps. And as things would typically happen, it was near the bottom, so the end of 2002, and things began to bottom into 2003 or so. That what led the way up at the time was the Russell, the small caps. And so it was kind of a contrarian situation where I had given up on trading the stocks back then and moved to futures, which were great to trade. But at the time, and, things have been, there's no best thing to trade. At times the futures became just very difficult to trade. They didn't move. And so you have to be flexible and apply a method, as we do, that's applicable to whatever you trade. So, at one time, trading whatever you trade just can become really tough, and you move to something else and apply the same method. So go ahead, Dan.
All righty. You were talking about that Bitcoin, and we put on a call spread on this. I mean, the pattern it looked like it was going to collapse. Now, this one obviously had a gap breakdown, so it wasn't the fluid, fluid moved down, but still, it's they think these cryptos are rebalancing. Bitcoin had a nice reversal yesterday. ETHE. I sent out a telegram right when it touched the 200. But it was on a downturn and there was absolutely no pattern. But I said, let's see if we can get a reversal bar. And then it just went straight up for 2 hours or so. That's just a V bottom type of thing. But yeah, these cryptos look like they might bounce a little bit. So anyway, so coin, yeah, let's try to leg into a condor. Riot here. It's a retracement from a square top. Today, MT Live, we're talking about quality patterns. I like the reversal for a put spread, but the square top is the problem for a swing. Mara, identical. I just said I'm looking at the bottom right here. Tesla breaking out pre-market. We did the chart of the week on this, on doing a put spread, and it triggered 2 days ago. We never got filled, and then I said hold off. So today might be the day to do it again. Let's see here. YouTube, Etsy, Piton Space. Yeah, Greg mentioned that yesterday in the green room. So yeah, we mentioned not chasing these indexes for the reasons Greg talked about, even though the Qs look the best of the 4 horsemen. And this is an end of day base on Etsy. So sure, that could be a day trade. We just want to wait a few minutes, check the bias of the markets, same drill every day. On Spice, we entered yesterday, a wide range breakout. So yeah, that looks good. Piton, that, wide range bar breakout, but at the 200 and a gap fill. This one I would wait for a 1, 2, 3 or something. JRBR. It's a bottoming pattern, but breakout, sure. That's a breakout. We had an HAE, same. I like that one a tad bit better because it dipped down, had this closing breakout, and then it's getting tight. I'll put that one on my list. Here's another breakout I got on my long watch list. Holex, it's just a bottoming pattern. But I like the 1, 2, 3 on the weekly with the big price one. Wow, I just saw BitW here up. I just saw print. Wow, I don't know if that's real or not. But look at this thing, $100. $100 down to 33 yesterday. That's quite a whacking. Let's look at other gappers here. There weren't too many earnings. But you know, this looks like a SPAC to me. You know, they SPACs have this footprint, but it's retesting here, and it's a bullish gap up. I'm gonna put that in the window. JZHN. Never heard of it. JZ. That's right. IDRA for Ken. Wow, that's a beautiful bar. That's an igniting bar. So Ken, if you were trading the weekly chart with a target of 250 to 3, then you got absolutely nothing to worry about. Stop week's low. Now I know you didn't ask that, but this is a big igniting bar, but percent wise, it's massive. As long as the 15-minute stays bullish, hovering around, no, I wouldn't worry about hovering around top of the candle. I would just trade the 15-minute chart, which is in an uptrend. It's a very bullish uptrend. Now, this is pre-market, it got whacked. So maybe just wait 10-minute high, something like that, if the market's holding. So that's how I would trade it. 15-minute chart, you know, make sure the market's not falling. Now, it's red bar reversal breakout. 867, well, 867, 15 cents. That's not a huge gap, but it looks higher. NVIDIA looks higher. You know, this has been a tank. It's hovering at all-time highs, but it's a bullish pre-market, Jim. You know, features the 4 horsemen rolling here a little bit. So, you know, if you just want a quick answer, 30-minute high, NVIDIA for day trade looks fine. Crowd is not climactic at all. And here's why. 180 reversal, bullish retracement, igniting bar, red bar ignored, continuation pattern. This ugly gap down bottoming tail is a continuation pattern. Now it's closing at the high with a bullish 15-minute chart. Would I enter it as a swing trade because it's far from the 20? Absolutely not. But your question was, is it climactic? The answer is it's extended, but it's not what we call climactic. Stop is more climactic, but it's not ready to short yet. This thing, it's, you know, acting beautifully. Look at Tesla, bottom right. Tesla looks fantastic, even as a directional 5-minute high, stop yesterday's low. That's a beautiful gap from a multi-month bottoming pattern, folks. Price, the target, 670 to 680. Let's watch 5-minute high on that. And McGraw, let's look for a put spread too. Nicola, we talked about yesterday. We did a put spread on this yesterday, Janet. So I'm not sure what you're asking me, but remember on the weekly, I said this could be the absolute home run for a core trade, target 25. So our analysis so far was dead on. Midla. Yeah. Bullish consolidation in the upper half. Bull 1, 2, 3 on the weekly. Price void. Yeah, I like that. I like it. Markets are holding. You can buy 5-minute high or buy right here. Stop yesterday's low. I like it, Sam. I personally just don't like trading the first 5 minutes unless you get a beautiful gap with a beautiful pre-market setup. Here, I'm going to look for put spreads now in Tesla, but this looks, we got to get a directional on this too. Let me look at a bull call debit spread out of the money for next week. Greg, I just saw all those other ideas, like, did them to him. Um, Our ARC F is doing well. CLOV, we entered yesterday, got